Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate filings. Today we're diving into a report from Golub Capital BDC, and let me tell you, it involves a financial agreement that got a little bigger. Think of it as ordering a large pizza, and then realizing you need an extra large, but with a lot more zeros involved. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where you can chat with other smart investors. Golub Capital BDC, a company that lends money to other businesses, just filed a report called a Form 8K. This is basically an update they have to give the government when something important happens. In this case, it's about a deal that lets them sell more of their own stock. The date to keep in mind here is May 16, 2025. This is when the event they're reporting actually happened. It's like the day they signed the papers on that bigger pizza order. Okay, let's break down what this Equity Distribution Agreement amendment actually means. Back in October 2023, Golub Capital BDC created something called an at-the-market offering, or ATM program. Think of it like a special vending machine that dispenses shares of their company's stock. They can sell these shares whenever they want, little by little. Fast forward to May 2025, and they decided they wanted to sell even more shares, so they made a change or an amendment to their original agreement. Here's the key detail: they increased the maximum amount of shares they can sell through this ATM program. Originally, they could sell up to $250 million worth of stock. Now they've bumped that up to 288,043,098. That's an increase of over 38 million dollars. It's like deciding you needed those extra toppings on your extra large pizza, and they will cost you $3.48.98. That's an increase of over $38 million. It's like deciding you needed those extra toppings on your extra large pizza, and they will cost you $38 million. The report mentions that all the other details of the agreement are the same. This means things like how they sell the stock and who helps them sell it are staying the same. The only thing that changes is the total amount of stock they can sell. For those who want to dig deeper, the actual legal document is attached as an exhibit. This is like reading the fine print on that pizza order form. The company is very clear that this report isn't them trying to sell you stock. It's just them telling everyone what they're doing. It's like saying, hey, we're getting a bigger pizza, but we're not offering you a slice right now. And that's it. Now let's scroll to the exhibits. These exhibits include opinions from lawyers about the legality of selling these shares. Think of it as getting a health inspection for your pizza to make sure it's safe to eat. It also includes a second amendment to the Equity Distribution Agreement. So what does this all mean? Well, Golub Capital BDC is basically giving itself more room to raise money. By increasing the amount of stock they can sell, they have more flexibility to invest in other businesses and grow their own company. Now, let's step back and look at the bigger picture. Golub Capital BDC is in the business of lending money to middle market companies. These are companies that are too big for small business loans, but not big enough to borrow from major banks. It's a pretty competitive market, and companies like Golub Capital BDC need to constantly find new ways to raise capital. This ATM program is just one way they do that. There are always risks. One risk is that if they sell too much stock, it could dilute the value of existing shares. This means each share is worth less because there are more shares floating around. It's like cutting that pizza into too many slices, so everyone gets a smaller piece. Another risk is that the market might not be so hot to buy their stock. If investors aren't interested, they might not be able to sell all those shares, or they might have to sell them at a lower price. It's like ordering that extra large pizza and then realizing you're not that hungry after all. Overall, this move seems like a pretty standard way for a company like Golub Capital BDC to raise capital. It gives them more financial flexibility, but it also comes with some risks. Alright, that's our breakdown of Golub Capital BDC's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.